Before the rate cut, honestly, what was your expectation like a few days prior?
I did expect that it was going to do more to the market though.
The Bank of Canada just cut interest rates by a quarter point. We're going to discuss in this video how that has impacted the real estate market, what listings are doing right now, as well as who can take advantage of it. Is it investors? Is it first-time homebuyers? And we're going to dive into it with my partner, Ryan Dick here. So we just had, about a month ago now, the first Bank of Canada interest rate cut.
Yeah.
It was a long time coming, probably a couple of years now. We've seen interest rates go from rock bottom to 5%. So we finally had this first cut. Why don't we chat about sort of what this means for sentiment versus reality? I know we want to go into a little bit of the actual data when it comes to listings, how buyers are feeling, sellers are feeling. Let's dive into that. So starting off, you mentioned something interesting, which was when it comes to the number of listings since January to now. What have you found on that side of things?
Yeah, so it's been interesting when you compare the listings as well as the number of sales. So number of sales obviously just being like the amount of raw houses that are selling, and then listings being the properties that are listed. So both are going up.
Okay.
More houses are selling now than they were in January, but the listings are far surpassing the actual sales. So what that does is that increases our months of inventory. So months of inventory, very simply, is basically the amount of months it would take to sell the amount of listings that are currently on the market. So say you sell 10 houses a month and there's 50 houses on the market, you've got 5 months of inventory, which is actually what we have right now in the Niagara region. Is we have 5 full months of inventory, whereas back in January we had like 2.9 months of inventory. So although sales continue to happen and are increasing every month, it's actually becoming more of a seller's market during that period of time, which is kind of interesting when we think about the fact that obviously people were kind of, from the beginning of the year, expecting that rates were going to kind of start to go down, which maybe kind of that was getting priced into a little bit before it actually went down. And then now that it's happened, you and I were kind of talking, it's almost like it was kind of like priced in already. Yeah. It was like, okay, it happened, thank God, because like if it didn't happen, things might have kind of started to go the other way a little bit.
I think if we think about back in February, on one of the previous videos we made together, I shared how I had one of my own properties that I had sold in November. The buyer backed out. In February, I was able to sell that same property for 80 grand higher. And this was initially a 680 sale. And then I sold it for 760. In that same building now, sales have come back down to 675 to 720, that kind of range. So February was a very active time in terms of prices.
Yes.
Because like you mentioned, there were less listings, less months of inventory. Now that number has come up and it's kind of given buyers more options, right?
I think it's also important to note that at that time, in like that February-ish time, people were thinking that rates were going to come down. Yes. So people were thinking rates were going to come down, and when rates come down, prices are going to go up.
Yes.
So sales were happening when there wasn't a lot of inventory on the market, with the expectation that, we want to get in now before prices do go up. Now it's kind of been stayed like that for a little bit, and all of a sudden prices are actually now going down, right? Our last month of data is that prices went down in May. I'm probably thinking it'll probably be something pretty similar in June, or pretty flat, but we kind of had this little bit of run up, and then we got the data we were looking for, and now all of a sudden the run-up's kind of almost stopped, right? So it's a little bit interesting there.
Yeah, and I think one of the other points that I know we wanted to discuss today was, what does this rate cut mean, reality versus sentiment, right? So we just did the math a second ago. So if you want to borrow $100,000, that half or a quarter point rate cut is going to save you $250 of interest a year, or roughly $20 a month.
Per 100,000, right?
Per 100,000.
So say you got 500,000 mortgage, $100.
$100, right? And put a little bit of principal in there for your regular monthly payment, but those aren't game-changing numbers, right?
not for most people who are able to afford to buy a house, anyways, right?
Yeah. So I think the sentiment piece of it probably matters more than the reality. Now, I have a variable rate mortgage on my home. I was happy to see that number go below 6% after going to 6.1% from 1.5%.
Yeah.
It was nice to see it dip back down into the fives. But the bigger thing that, like, even in the Bank of Canada press conference, they were already asking, it's like, when is the next rate cut? Like, barely like 10 minutes after it was announced that there is a rate cut, people want to know, when is the next one? Is it July? Is it September? Is it at least one more before the end of the year, right? So I think that pace of rate cuts is going to be the thing to watch, and the sentiment around that.
Mm-hmm.
And then it is interesting, like, what do you think is going to happen in the real estate market if things go according to plan? So for, like, people are expecting, say, in the next year and a half, 2 years, there's hopefully going to be, another 1.5%, 2% of rate cuts, right?
Mm-hmm.
If that ends up playing out, I don't know, where do you personally feel things are going to be heading if that scenario plays out?
For sure. I think it's very interesting to consider that, because I think, for instance, like with this last rate cut, a lot of people thought that, okay, maybe multis in particular, we're going to start to see, because no multis were selling. Even when other things were selling in February and July, multis have not been selling at all.
Yeah.
And so I think a lot of people, myself included, kind of thought that, okay, once we get this rate cut, maybe we'll start to kind of see a little bit of action on them.
Yeah.
And maybe the amount of actions increased a little bit, but nominally, right? So going forward, I think the Bank of Canada is kind of in a unique situation right now, where depending on how they play it and how they space it out, they could kind of keep things very much under control, right? Where I don't think they want to see housing prices go down, because I think it puts a lot of people, particularly the banks and lenders, in a very bad spot.
Yeah.
But that being said, I also don't think they want to see it run up.
Yeah.
And I think they'll probably err on the cautious side in terms of timing.
Yeah.
Because I think that they know that worst case scenario, they just pull a little half point rate cut and things are going to change, right?
I mean,
what do you think about that?
Like to a certain degree, I think they've succeeded in breaking the spirit of the investor.
I couldn't agree more. I couldn't agree more.
And that I think connects to like the sentiment piece, right? At one point, I think close to a quarter of the purchases were being made by investors buying a rental property, a second property, right?
Well, think about it. Think about an investment property right now, like a duplex.
Yeah.
Okay. Very simple duplex. 2 years ago, when prices were at their peak, what was a duplex cash flowing a month when rates were zero? Bank of Canada rate was zero.
Usually around 500 at least, right?
I mean, when things were at like, 750, 800 for a duplex, you were pretty much at around a break-even point there. You weren't really making any money, right?
Yes, when things really started.
But people were still buying those at that point in time. People still wanted to buy those at a break-even price point.
That's right. Yeah.
Now that same duplex, although it's went down $200,000, it's still at a break-even price point, but it's $200,000 cheaper.
Yeah,
and nobody's buying it.
Yeah.
Right. So you think about the investor sentiment there, where we just look at, okay, your numbers 2 years ago looked like this.
Yes.
Your numbers now monthly look like this. Yeah. So very, very similar, maybe a touch better.
Yeah.
But your get-in price is way better. So that means your cost to buy, your return on your cash invested should be better, but people are not buying. I think like the spirit of the investor, I think it may be the spirit, also the pocketbook, I think of the investor got hurt a lot as well.
Yeah.
Right?
Because the people who were aggressive, who would be taking advantage of the current situation, they've just spent all their money, and they're kind of balancing like refinances coming up. Do they need to pay off some debts, right? So
like think about, we know a lot of investors we just know a lot of investors in general, and I know we've had conversations with them that some of them are like, I'd love to be able to buy right now. And they cannot.
Yeah.
Right. And then you have the people who maybe are starting off that maybe could buy right now from a financial situation, but they're a little bit cautious.
Yeah.
They're, do I want to jump in right now? I don't think that's necessarily a bad thing to be a little bit cautious, because I don't see the prices going like this in 3 months. Right.
No.
So.
Yeah, it's interesting because before this crazy run up during COVID, it was common to find properties that would cash flow at least $500, right?
Yeah, for sure.
Occasionally, we'd have the client.
2021 all the time, especially beginning part.
I'm talking more like 2019.
Oh, then it
2018,
was
2019,
like, then it was
right?
great. Then we were actually getting cash flow, like real cash
Yes.
flow.
And in a way, like even with all the declines, we've not gone back there. Like if in order to get those same like $500 cash flow numbers, like prices need to go down like another 100,000, right? If they come to like 600, like
close to it,
right? And I think that those are prices that sellers aren't quite willing to accept right now.
Definitely not.
That's maybe the price it needs to get to for investors to be spurred to buy. So the home buyers are buying all day, right? If they can afford it, they want to get into the market. But I think the investor is kind of on the sidelines. And whether rents come up, rates come down, but I think if that cash flow comes back, we'll probably see a more meaningful return of investor buyers. But yeah, I guess it's to be seen, right?
Yeah, I think there's a lot of factors there. You know, the capital gain notion that came out obviously didn't help a lot of investor sentiment. I think the talk of the the tenants' bill of rights potentially coming out also isn't exactly helping investor sentiment. I think it's very curious right now to look at, say like a street that's got a bunch of brick bungalows on it that are 1,000 and 1,200 square feet. There's lots of them throughout the Niagara region. And, 18 to 36 months ago, the duplex on that street was considerably higher than the single family home.
Yes.
Considerably, right? Now, not really the same.
No.
Not really the same at all, right? Yeah. So I think that's an interesting, I think at some point in time there, we kind of hit a little bit of an equilibrium or a kind of tipping point, if you will, where maybe that does kind of start to change, but it's an interesting point, right? It's interesting to see how that works.
Well, I think that's a good segue to talk about who can take advantage of this market, right?
For sure.
Investors, it's a hard thing to say now is the time to buy, because if the cash flow isn't there, there's a bit of speculation in there, right? You're buying at today's prices, so potentially rates go down, rents go up. It will be a good decision in hindsight, but it's not 100% clear now when you're taking that action. Versus now potentially with home buyers, the equation is a little bit different, right? So what are you seeing working with first-time buyers, buying in today's market, people who don't have a home they need to sell? What's their sentiment like these days?
I think pretty good. I would say first-time home buyers have, I think, kept a lot of the market turning right now, because I think a lot of people, say you are somebody around the age of 30, give or take 5 years, between 25 and 35, right? You were maybe thinking about buying a home 2 years ago.
Sure.
You likely got priced out.
Yes.
Right? You had to either put 15, like 5 and then 10 on the rest of the mortgage. So your down payment was a lot higher. You were still qualifying at higher rates, and prices were really high, even compared to, say, what your monthly payments would have been, right? Whereas now it's like, you're sitting there, prices have come down 150, 200,000. All of a sudden your down payment becomes meaningful again. You maybe can buy a house with just 5% down because you can find something in the 400s or just above 500. Haven't really gone down at all. Rents have stopped going up, right? Like we've been pretty flatlined for the last little while. But that being said, like good rental products are still moving pretty quickly. For a little bit there, you could rent anything that had a running water and heat, just because it wasn't a thing.
Nothing, right?
There was nothing there. Now there's much more options for renters, similar to first-time home buyers, but a good product still moves pretty quickly, and you still need to have, a good application or a good tenant profile. So rents haven't really gone down. If you are somebody who's trying to buy a home, you're going to be one of those persons with a good tenant profile, generally speaking.
You have savings, you have good income.
So you're somebody that, a landlord would want. But that being said, there's other people like you. Those homes are not going down in rental prices.
Do you think that's why the rental market has softened? Do you think a good number of high quality tenants have
right? I don't necessarily have does make a lot of sense there.
Yeah.
I know me myself, I've dealt with a lot of first-time home buyers recently.
Okay.
They're kind of keeping my wheels turning, my lights on, so to speak, because that's just, it makes sense for them to buy, right? Whereas if you're somebody who has to sell a house, depending on where you're going, if it's lateral or you're moving geographies, it could be a little bit different. But if you got to sell a house right now and you're not ready to price it aggressively, it's going to be hard to move.
Yeah.
It's going to be very, very hard to move, or it's got to be unique.
Sure.
Those are pretty much the two ways your house is going to move right now. When you've got, I think we have...
And objectively unique. Everyone thinks their house is unique, but objectively unique.
Just because you put in the herringbone, you may think it and you may love it, but it is not making a huge difference, right? And I
clearer, right? If they're renting at a certain rent price, 3 years from now, if they're ever forced to move, find a new place, rents are going to be higher. Versus if they can afford to buy a house today, even if the payment is higher than what it costs to rent, they're buying when prices are, call it at lows, the market's soft, lots of listings, right? Lots of inventory. They're locking in the mortgage amount, and there's a lot of expectation that in 3 years they're renewing potentially into a lower interest rate, lower monthly payment, right? So that becomes a lot easier decision to make for many of these home buyers, right?
Yeah, no, I would completely agree with everything you said there, right? I mean, the odds that rents go down in the next 3 years, probably pretty slow, right? Pretty slim.
Yeah.
And I think that the odds that house prices go down in the next 3 years, also probably pretty slim.
Yeah, because they've already come down a lot.
They've already come down a lot.
Yeah.
And then the odds that interest rates go up in the next 3 years, also probably pretty slim, right? So if you're let's get in here today or we're going to miss out, but it is, if you've been kind of sitting on the sidelines and this is maybe a time that you're like, maybe it's probably a pretty decent time to go through. I'm not saying you got to rush out and buy one tomorrow, but it'd be a good time to see what your pre-approval is. Go out and look at a few homes and see if something does work for you, because, you know, whether it's the next 3 or 6 months, I think this is going to be one of those times where you look back in hindsight that will probably be good. I mean, so it's interesting, but we'll see what happens.
Yeah, so I guess in terms of what's next to come, like, I guess what are the things that you're looking out for when it comes to the second half of this year, interest rate wise, market wise, any things you're like carefully keeping an eye on right now?
I'm definitely looking for buyers, because I feel like they're going to be the people who have the opportunity to take advantage of this market, right? So I think that those are probably good positions to be in if you're somebody like that. I think you're going to have to be very creative as well as priced appropriately if you do need to sell your property right now, right? If you're trying to test the market to get a high price, good luck, right? It's just not going to happen. Right. So I think kind of watching that and watching where that goes, I'm very interested to see how the middle of the market moves. Very, very interested to see how the middle of the market moves over the next 6 months, the remainder of the year. I think that will be very telling as to where things go going forward. I don't really know where it's going to go, I don't think it's going to maybe go down too much, but I think it very well could stay flat to go down a little bit. It could go up if all of a sudden they do a couple rate drops though, right? So
no, definitely keeping an eye on that. And we're like, especially on the mortgage side, we're starting to see the difference between the variable rate and the fixed rate start to compress.
Okay.
Because finally the variable has come down a slight amount.
Where are we at now, like between those two, I guess?
So like for a typical home buyer, with like a 3-year fixed conventional, right, 20% down, they're now in the low fives.
Okay.
So 5.25, 5.35. versus with the variable, they're in the 6, around 6.2, closer to 6, around that range. So they're still about 1%.
Okay.
But at one point, it was like 1.5%. It was ridiculous, right? So it'll be interesting to see as the next couple of rate hike cuts happen. Do we see the fixed rate go down further, or does that kind of stay where it is, like the 5?
And we just keep compressing it almost.
Yes. And then at that point, it becomes an interesting decision to make, like maybe you actually get the variable. Then you don't wait the 3 years. But I would personally wait until that's like half a point difference. Like if it's even 1%, 3 years is a short time, right? Get the lower rate now and then renew later. But anyways, it's interesting to see. I have a particular client that got a promotion by TD a couple of months ago. It's not available now, but they were offering prime minus 1%, which was like, before we got it all the time, but recently none of the lenders were offering it. He got it, and then before he closed on his pre-construction purchase, the rate drop happened. So it was great. He got the prime minus 0.5, and then prime came down 1/4 point. So
that's great.
Like, yeah, it really worked out.
In your circles there, that's actually a really good point that you brought up, is like, you and I were talking about variable rate mortgages that we have and how they're prime minus 1%.
Yeah.
And you're not really seeing that right now.
No.
In your circles, do you think it gets back to that? Or do you think kind of that discount on prime where we are is kind of where it's going to be?
Yeah, that's a good question. I don't know, because like the variable rate mortgages are priced based on the Bank of Canada prime rate.
Yep.
Even that market is expecting rates to come down.
Yep.
Which is probably why they're not giving those deep discounts, because it's going to be that deep discount plus reductions, right? If the cuts happen and the expectation isn't huge cuts, where it's like maybe it's 1/4 point more, it's going to be slower, then potentially it could further reduce the variable rate by primes at 5, it dropped to 4, but then say we have a prime minus 1% rate at that point. So like the insured rates are still lower. So if you're putting 5-10%, going back to the first time buyer, like their rates are lower than everyone else's, right? Because they're insured. So they still have the prime minus 1. Like those are still available, but for the conventional home buyer, it's not quite there. And for the investor, just forget about it. Like they're just paying higher rates. But yeah, it's interesting. We have seen the insured fixed rates dropped like the 4.84, 4.74, right? So we're seeing some 3 and 5 year fixed rates around that range. So with we could see insured rates drop to like high 3s, low 4s if, a few more cuts happen and if that really spreads down to fixed rates as well. So that'll be an interesting time to see. And that may even make the case for the first time buyer even easier, right?
Right.
Yeah, I think we covered a lot there regarding this rate cut. Before the rate cut, honestly, what was your expectation like a few days prior? And I'll start with, I was asked by, I think, one of my clients, what do I think? Like the day before. And I was like, I've been wrong so many times expecting a rate cut. I'm going to predict there's no rate cut. Literally the morning of, it's like a rate cut. So that was my expectation anyways.
Yeah, I kind of definitely thought that it was probably going to be like a coin toss as to whether they were going to do it or not.
Yeah.
I did expect that it was going to do more to the market though, when it did happen, whenever that was happening, whether that was on that day or whether it was at the next one.
Yeah.
I did think it was going to have a little bit more of an effect, but I do think, like you and I kind of talked about, I think it was a little bit more priced in.
Yeah.
And it was more like, okay, this was already priced in. Okay, this happened, but we already priced that in last month, kind of thing. So
yeah, we'll see before the end of the year. If there's another 1/4 point or a 1/2 point, that'll be when we hopefully really see some awakening in the real estate market.
Yeah, maybe not though, right? Again, I think if they keep those 1/4 point, like you said, a 1/4 point doesn't move it very much, right? It's not making a property go from negative cash flow to positive cash flow.
No.
It's not, it's not materially changing somebody's lifestyle on the other side, right? So.
Yeah, so on that happy note, we'll wrap it up.